Good morning and welcome, Patriot Radio News Hour. Joe and Jason live on this Tuesday, the 3rd of January, 2023. Yeah, you gotta change that last digit when you're signing those checks and dating those checks. It's now 2023. I hope all of you had a fantastic holiday season. I mean, we had it all, Thanksgiving, and then, of course, Christmas, New Year's, all this other stuff. We had bowl games. Man, I'll say this. Those two college bowl games, the semifinals, they were just great watching. Yesterday, Jason, we had a professional football player drop to the turf yesterday. Last night, a quote-unquote hit to the chest. I've never seen anything like it. Lots of speculation there. Let's hope it's not what we think it is. And I'll just leave it at that. Uh-oh. I don't hear you. There you go. Yeah, we may touch upon that on the half-empty cup. We got to get retrained. These 3-day work weeks, it takes a while. I mean, the day is Tuesday. Jason and I were talking this morning. It's like, I'm just getting ready for Monday. Yeah, it's Tuesday. But we'll be here Wednesday, Thursday, Friday, and then next week we'll be back 5 days a week. We will announce tomorrow our winner on our 10th ounce Gold Eagle prediction. We would have had it today, but Jason, we were working on so many things. We were just trying to get caught up. The Silver Eagle winners, guys, thank you so much. I got your emails. The girls are going to be reaching out, and your Silver Eagles are going to be on the way. Make sure you join our YouTube channel. We are going to be giving away all kinds of stuff all year long. Go to YouTube. Simply just search Patriot Trading Group. Will come right up, and then you can start getting your opportunity to win some cool stuff, Jason.
Who got the closest guess, Joe? Who is the closest? How close was that guess for the Thursday?
I will say this: very close. We had some very good guesses in there, and of course, you and I really we needed to split our predictions. I was at the lower end. You were kind of at the higher end. But I'll say this: we had predictions all over the place. We had predictions in the 1830s. Matter of fact, we had some predictions. Gold right now, another rally again today. Right now, the February gold contract in New York, 1838, up a dozen. Silver's up 25 cents. They've been up more than that today. Give it a little bit back as the Dow was trying to rally to start the new year. That rally has fizzled out. It's going to be a tough year for equities no matter what happens. We do have the Fed minutes coming tomorrow. So the Fed minutes from their December meeting, Jason, will be out tomorrow. And at least as far as we have seen, the Fed has talked really tough. The minutes tended to be a little more, I'll call them balanced or a little more dovish, if you will. So we'll see what this meeting comes out. If there's any hint, Wall Street has any hint that the Federal Reserve is going to slow the pace of rates even faster, we could be in for several very big days.
Yeah, I think gold and silver are definitely primed, Joe. And I was listening to a little bit of Peter Schiff over the weekend. Kind of any gold and silver guy, you kind of listen to him once in a while. So he's like the guy that's out there everywhere. But he was saying a few things about the inflation and made a lot of sense to me, Joe. In almost any situation that the Fed goes, you're going to have gold and silver going up, and you're going to have inflation. He's making the case that there is no way you can get out of the inflation. No matter which way they go, no matter how they pivot or go back and forth, he believes that quantitative easing is going to start up later this year. I don't know if that'll happen, but he even showed that this inflation is built in, Joe. It's built in. It's be impossible to stop.
some guys that I like as people that have listened to me over the years. Jeffrey Gunlech is a guy that of all the guys out there, I really pay attention to. And he kind of shocked me, Jason. He's saying that the Fed is clueless, pretty much, that the big recession is coming. It's going to catch them off guard, and that they're going to be lowering rates this year. That's huge. If that is truly the case, we're going to see all-time record high gold prices. I'm pretty confident that we're going to see that no matter what. Record high gold prices. Don't be shocked at all to see silver start with a 3. Silver in the 30s is another one of those things I would expect. And once again, my platinum call, we made an all-out buy on platinum. Jason, that was $100 ago. Platinum continues now approaching $1,100 this morning.
Yeah, I was looking at that just as you're speaking. So it's done well. It's done really well, and it's got a little ways to go to catch up to gold. But we're going to see a lot of this stuff happen this year, Joe. 2023 will, I think, rebalance a lot of assets to where they should be. I mean, you can't have a great reset unless everything goes back to where it belongs, which is in relationship to each other, Joe.
Yeah, and the amount of money. Listen, it's all about the money creation. That's inflation. Higher prices are a symptom of it. They did something during COVID in regards to the money supply that the world has never seen before, which I think has a lot of people saying, kind of like what Peter Schiff was saying, hey, it's not going to go away. The Fed may have to stop pretending to fight it, but it's not going away. Patriot Radio News Hour will be back after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour. The Dow's down 150 points now. Was up over 300 points earlier this morning. Bad news out of Apple and Tesla. We'll get to that in a moment. The S&P is down 27. The NASDAQ's down 100. Right now, gold, again, off the highs, but still up. About $10 right now, 1835. That's the February contract. Silver at 24.25. This market recap brought to you by Y Refi. We've been talking about them forever. I mean, listen, the stock market is so volatile right now. I mean, we talk about how bad 2022 was. Do you know there's only been a handful of years where you had back-to-back down years for the stock market? And Jason, every one of those, these were major depressions, major recessions, and I feel like we're shaping up for one of those again. Don't have to worry about it with Y Refi. A fixed rate of return every single month, up to 10.25%. The interest, listen, not only get the high rate of return, you know what your statement's going to be. It doesn't matter what Wall Street does. It doesn't matter what's in the Fed minutes. You can make it into monthly income if you want. You can compound it. You can roll it over. No loss of principal. If you want to end it early for whatever reason, check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com, or 888-Y-REFI-24, 888-Y-REFI-24. Right now, you have to be an accredited investor. But, Jason, they're getting ready to take that away. They're going to open this thing up to everybody. And I'm going to say this, not a moment too soon.
Yeah, I mean, your comments about the market, I mean, I've said a couple of times, I try to point this out, that in 1929, the markets went down, and they were down for 27 years before they got back to the levels they were in 1929. Scant 40 years later, 1968, the markets went down, didn't come back for 25 years. And that was under a situation where the gold was delinked from the dollar in 1971, and you had the inflation of the 70s and the early 80s. Well, here we are, Joe. It would not surprise me if the market takes a huge leg down this year, and it just takes a large amount of years for it to come back. So if let's just say it takes 10 years. Let's say we actually get this stagflation where it takes years to come back. Like, just like the Japanese markets, they just floundered for a whole generation. Why refi can give you a place to put your money and invest and make something when the stock market is just dead for, Joe, maybe 10 to 20 years. I'm not saying that's for sure going to happen, but it doesn't look good for a long time right now.
Listen, let's just understand. We have to understand what we've been in. We've been in this 50-year cycle, really, when the closing of the gold window did a lot of things, but really it allowed for this debt super bubble to get created. We saw the taking off of the national debt, right? Think about this. 1971, the debt was $400 billion. $400 billion. Heck, Jason, we go $400 billion in debt in a month, right? I mean, a bad month for the U.S. government, $400 billion now. I mean, we went over almost 195 years without getting $400 billion in debt. And most of that $400 billion, about $250 billion of it was left over from World War II. Most people don't realize we ran just as many budget surpluses as we did budget deficits after World War II. Heck, we were running some budget surpluses during the Great Depression. Jason, that's been all out the window. We've had this 50-year debt cycle, and they capped it off. They capped it off with this huge increase in money supply because of COVID, the likes that the world has never seen. I mean, you're talking about taking a money supply that was I want to say about 4 trillion and turning it into 20 trillion. And now, and a lot of people are saying, hey, this card isn't going to work. This debt card isn't going to work. This 50 years of every time there's a problem, let's just spend our way out of it. Jason, we're at this point now, or any more spending just leads to higher inflation.
Yeah, and they can't quite get their balance sheet down, the Fed. And sure seems like, Joe, that we're looking for some market pain and some scary news headlines in 2023. And then it just seems like, you just said the Fed looks possibly inept, like they don't know what to do. Well, because they've been in a catch-22 for a couple of years now. I mean, they're really at the end. They can't really be kicked down the road quite much further. And so printing money, Joe, they're going to do it. Yeah, at some point, they're going to go back into it. And the market. Here's the thing, Joe. The markets. There's a lot of optimism with these guys in the markets, thinking that things can be fixed. At some point, they're going to figure it out. They're like, wait a minute, this just can't get better. Then what's going to happen with gold and silver, Joe? Then what's going to happen?
Yeah, I think we're going to see some really unprecedented times in the market. And you got to remember, too, during this debt cycle, the dollar was still the king. Now, and I'm not saying, listen, the dollar, it's still the king today. The difference is there's a rival now. Whether or not you can say what you want about China and the Chinese, their economy is on par with our economy in terms of stuff, right? They consume more stuff than we do. In terms of dollar terms, our economy's still better. But Jason, they want a seat at the table. China wants a seat at the table, and it certainly looks like they have made huge, huge progress in their relationship with the Middle East, particularly Saudi Arabia and the United Arab Emirates. This is one of those things, we talked about Joe Biden. This is a very weak president. He's viewed very weakly out in the world. And I think this is a huge example of that. What's going on with the relationship with China, with the Saudis and the United Arab Emirates. I'll be shocked if we get through 2023 without a major announcement from them that China's going to start buying oil in renminbi. I'll be shocked. I don't think we make it out of 2023. And that's a game changer. Listen, the dollar is still going to have a seat at the table. The problem is, Jason, there's another guy there that also, hey, I want to eat too.
Yeah, and some of the guys that are looking at the dollar strength in 2022, remember, it's just what I said. Joe it's going hand in hand. What Joe's saying and what I'm saying, which is, I think the dollar strength, you see more of that this year because they're going to slow down the rate hike. I think we see 25 basis points in February and maybe nothing after that. And I think the markets are going to be like, it's the good old days. Here it comes, the free money, right? And so the dollar, you may see some dollar strength here, Joe, just before what Joe says happens, where, hey, China says no more dollar, other countries say no more dollar, and the markets show all the stress, and they're not going to take the rates down right away. So you're going to have market stress that's going to be very severe. And I think, like I said a minute ago, the Wall Streeters are going to be like, they're going to figure it out, Joe. I think they'll figure it out, and then they're going to sell everything they got, aren't they, Joe? And then where are they going to put it? Where are they going to put it? Because then the dollar's going to start dropping, right?
And remember, I think this is going to be, as Jason said, we had one of the best dollar years ever last year. I think that's going to be followed with one of the worst dollar years this year. And to Jason's point, it's really going to set up very, very nicely for the precious metals, gold and silver in particular. You got to remember, we've got record demand. There's record demand for investment. Gold and silver coins, gold and silver bars, what we do. But this is demand. It's global. It is global. There's not anywhere in the world where people aren't, maybe, owning some gold and silver is probably a pretty good idea. We were at a bunch of parties, Christmas, New Year's, everybody wanted to talk to me. I was like the most popular guy at the party again. Oh, what's going on, Joe? What do you think? And how busy are you? And should I be getting in? All of these questions, 20 years ago, you were the crazy guy in the corner. Now everybody wants to hear what you have to say. But you got to remember, the only thing that struggled last year, and think about it, gold and silver were essentially flat for the year, was the ETFs. That was the paper gold and silver markets. And they were playing, Jason, on that strong dollar thing. So they were like, yeah, we don't need to hold paper gold and silver because the dollar's rallying. Well, guess what? They're all wanting to hold paper gold and silver again. 2023, we could shatter every record investment-wise going back to the financial crisis.
In 2019, before the COVID emergency came in, we talked about the repo markets, and basically it was all breaking. And gold had not hit its record high yet. It did in 2020. Well, all other nations, most industrialized nations right now, are having gold at record prices, except for America. This was the same situation we had in 2019. There's a little bit of a bullwhip kind of happening, Joe, with the this year to year. You get an emergency, you get a bump, then you get the sideways, then you get you get another emergency, you get another bump. Gold's really done really well, Joe, and it's doing what it's supposed to do. And when emergencies become economic, Joe, the only trick they have is just print money and give everybody what they need to see if that holds, Joe. They're going to be doing that, I think, later this year. I think you see rates at a certain level that don't go back to zero, but then you see the printing happen again, Joe. I think that's what we're headed for.
It'll be interesting if they try to do quantitative easing with rates not at zero, because that's really the only way that really works is, hey, first you bring the rates to zero, then you turn the printing presses back on. Jason, I don't think they can do that this time around, and I don't know what they'll do. I think you're right. I think they're going to end up panicking, and they're just going to go back to what they know, which is going to be, when we start talking about, hey, 10, 20, Now all of a sudden, Jason, are we going to be looking at 30, 40, 50% returns on gold and silver? It's absolutely possible. Just depends on how this is going to play out. I just put it this way. Best case scenario for the Fed, in my opinion, is a recession, rates that are at, let's call them, 5-ish, 5.25, and they stay there. That's probably the best case scenario. I don't think most people actually think that's going to happen. I'll tell you right now, Wall Street at 32,000 and change, 33,000. Jason, they're basically betting that the Fed's going to start lowering rates and start quantitative easing again before 2023 is over.
The faster they can get that digital currency in, Joe, they could go to negative rates. Once that digital currency is in place, there's a whole new set of rules. I mean, some other countries were testing negative rates, but it doesn't work because people just run to the bank and pull their money out. Well, if there's no bank to pull your money out of, I guess they could go to negative 1%, Joe, and I guess that maybe that would they could print a lot at that point, right? They can just suck it out of your bank account when they tax you on your negative rates.
They can do negative rates for personal accounts. They can put expiration dates on your credit, saying you've got to spend it by X amount. I mean, there's so much that they can do with that digital stuff. Jason and I, we're coming right back. Stay with us. We're back here, 800-951-0592, Patriot Radio News Hour, Joe and Jason. The stream for 1360, not our fault. The stream is down. We are actually playing Catherine Austin Fitts on the 1360 website. I'm not sure if Phoenix is affected because we do stream the show to Phoenix, but I think we use a different stream. I mean, we've got so many streams, I can't keep them all together, but I know the main stream at the 1360 website is down. You're going to be hearing, though, it's pretty cool because always good listening to Catherine Austin Fitts because she's got her pulse on this as well. Jason and I were talking about Glenn Beck. He had one of his people that he likes to bring on. And I don't know, you know what, right now, I don't know that we can play the clip and have the YouTube people hear it. So why don't we just kind of paraphrase, Jason, what it is that they were talking about as far as what they're expecting.
Yeah, I watched this thing over the weekend, and then we're going to try to be able to have this ability in the future. I'll talk to Dominic because I think we could splice some video and Joe and I can stop for 5 minutes, listen to the video, and then splice it up. But that aside, Joe, he talked about the Department of Labor, and there's some stuff about the Department of Labor I didn't even know about. Like they haven't any kind of reporting or any kind of auditing about what they do since 2013. I mean, there's like no record keeping there or something. Is weird stuff. I mean, but the Department of Labor has rules, and one of the rules, which I'm not a big rule follower. I don't like. I think the less rules, the better. But one of them is that if you're at a company, let's just say Walmart, or if you're a smaller company, McLean Western, which is a shipping company that used to ship for Walmart before they took over their own shipping. If somebody's handling the 401ks or the pensions, there's a rule in place from the Department of Labor that says you have to, whoever controls that at your company has to do it on the behalf of the employee's best interests. It's in the law. Right. That's the wording.
In other words, hey, you guys can't enrich yourselves with, hey, we're going to offer you a 401k, but you know what? It's not going to be great for you guys, but it's going to be really good for us. That was kind of a no-no, right? That was like, hey, you can't do that.
No speculating, right? Right? No putting it into my dad's company over here that will help feed hitting. Even though we know this stuff happens, we know that big companies have done things like this before. But they changed the rule, and it matters that they changed the rule. It matters that they changed the rule because what they changed was the wording. They said this. They just took that out. They just simply took out the piece that says you must, as the guy in your company that handles investments for your 401ks, your pensions, or whatever investments, retirement funds, whatever. You don't have to. It doesn't have to be on behalf of your employees anymore. That they just took that part out. All the rules are the same. All the other rules for these guys that have these jobs are the same, Joe. But they took out the wording of in the best interest of the employees' money. Basically, these guys now have been given by the Department of Labor the power to take that money and go wherever they want with it. This was announced the day before Thanksgiving at 3:00 in the afternoon. This is when they announced this rule change. It was also at the very same time they announced that they were going to start testing central bank digital currencies, because we Joe and I reported that. Yep. Glenn Beck makes
by the way, that test, a 12-week long test. So we're still in that test as we speak. And Jason, I think this is not only is it tied to digital, I think this is tied to ESG. This is, in other words, the companies were saying, hey, you know what? Well, we really can't invest in all this green stuff because you got this rule that says we got to operate in the best interest of our employees. And, I don't think that sector is going to do so well. And then somebody may turn around, they'll figure it out and sue us.
Correct. And let's pretend you're the head guy at Walmart with these investments. And then you got the head guy over at Target, the competition, right? You may want to invest in green energy, but you might be wondering if you're a Walmart guy, hey, if I go into this green energy and then try to get our ESG score, Target might pivot and they might beat us at this. Well, with this situation, nobody has to worry about the risk. We're all going to go that direction because it's all going to beef up our company's credit score, our social credit score at our company. And it doesn't really matter what the employee thinks. One of those things, Joe, that I've never gotten into a 401k is some of the companies that are invested into, like Planned Parenthood. I really don't want any of my money invested into Planned Parenthood if it's a part of the 401k at the job I'm working. A lot of people don't really understand the companies that their money's going into, that they're feeding. That's one of the things that I really disliked about 401ks, Joe. And this is just going to make it worse.
Yeah, this is a big change, and something you don't see the Department of Labor making changes like this. We're accustomed to see, okay, the SEC's stepping in, right? Maybe the New York Federal Reserve, because they control Wall Street, may make a few tweaks here. But this coming from the Department of Labor and just essentially, I think, Jason, opening up the door. First of all, I think twofold. Number one, I think returns are going to be hard to come by. We've lived in this 50-year debt bubble where anytime there was a problem, throw money at it and throw as much as you need to at it to fix it. And now we have this inflation. Michael Burry, you got to follow him. I mean, this guy really going back to housing and the financial crisis. He was out this weekend. And it's important to hear what they're saying. The U.S. is in a recession by any definition, right? You got to listen to what Jeff Gunlatch is saying, right? He's saying, listen, this isn't your garden variety recession. This is going to be something significant to where the Fed is going to be shell-shocked. Burry saying the Fed is going to cut, the government's going to stimulate, and we're going to have another inflation spike, Jason. Just kind of what we've been saying. Listen, there's no happy medium here. This is going to be, we were calling it last year the double Great Depression, right? The double depression, because during a depression, the problem always tends to be a deflationary cycle, which kind of makes sense, right? People get fired, people get laid off. They can't buy as much stuff, right? Companies aren't spending a whole lot of money because they don't, the economic outlook's uncertain. Everything slows down. Prices tend to go down. Jason, this time around, I think we're going to have the exact opposite. When they go to stimulate again, it's going to cause another inflationary spike. It's madness is what it is. That's why you got to have your gold and silver put away. We're going to help you do that next. $800-951-0592. The Dow's down 200 points. Gold's up 11, 1838. That's the February contract. Quick look spot here. Got gold up, 6, 1830, 1831. Silver above 24. Platinum, 1,074. And just like I thought, look at palladium, down 80 as again, last 2-3 weeks, we were telling you, sell that palladium, get into that platinum. You definitely were going to be rewarded. Jason, today I've got $20 gold at 2,095. This, when we're talking about what gold can do and what silver's going to do, we're sitting here, gold right around this 1840 level. This is a very, very big technical level for gold. Break above and a close above 1840 just sets up all the computers. And this is just computer trade stuff, right? We talked earlier about, gold as an inflation hedge. And a lot of people, well, why didn't gold do better last year? And of course, it all had to do with the paper ETFs and now the dollar's on its back foot again. We're going to see gold and silver roaring back again. But at $2,095, and really, Jason's holding that up for you guys to see. That's a $20 Liberty right there. 800-951-0592. I mean, Jason, we had them at that price almost $200 in gold ago. Really had a good opportunity over the last 3 to 4 weeks where the premiums for gold and silver, which have been all-time record high premiums on gold and silver. Jason, we've seen these premiums come in. I would venture to say right now, the gold premium is probably right about where it should be. I mean, when you're thinking about, buying gold at about $250 over spot at $1,840 spot, that's not bad. That's not bad. Silver premiums have come way in. I mean, let's not kid ourselves. They're still pretty high, but they come way in as well.
If some of the things that we are thinking are going to happen here soon, Joe, in 2023 and even beyond 2024 and so on, you'll see $500 premiums above gold on these coins. And you could even, in a crazy world where things get really bad, you can see $700, $800, $1,000 premiums over. I mean, that's a little farther away than we're at now, but it can happen. 500 is very easy. Joe talked about him and Eric back in 2011 when gold was hitting its record high, that they were selling coins. I think the gold was getting around 1,800 and they were selling coins at $2,200, $2,300, $2,400. Especially some of the lower, I think Mint State 61 stuff was like
this is
$600
exactly
over.
Where we were. Jason, that's the truth. $1,800, almost $1,900 gold. You're paying $2,300 and $2,400. That old supply and demand thing. And like I said, we got demand. Demand is here. The ETF was the only thing missing, and all of the stimulus, if you will, for that to continue is gone, right? The Fed's already, 4 straight rate hikes to 75. We're already down to 50. We've got people that are majorly respected people now coming out saying, hey, second half of 2023, we are going to be in not a garden variety recession, but we're going to be in the midst of another one of these. It's going to probably feel like the financial crisis type thing, and the Fed's going to blink and have to start cutting rates, start quantitative easing again. Jason, we can easily see premiums of $500, $600, $700, $800 over, especially when you're talking about record high prices on top of it. And really no need to go away from the trade, especially if we're in the midst of this recession and the Fed's got to go reverse course. And then Michael Burry's saying, hey, listen, as soon as they reverse course, now we've got a new problem because they're going to stoke inflation again.
Well, Joe, and this might be a slow grinding kind of market downturn. It may not be a fast crash that everyone's waiting for. If you're sitting there waiting for the second shoe to drop, it may not drop for a long time. 2022 was pretty severe. I mean, it didn't seem like it was all that bad. I mean, the news wasn't completely grim and horror stricken. It wasn't blood in the streets, but it was a bad year. If 2023 reflects even part of that, it doesn't get us, it's not as severe as we think it could be, Joe. And then 2024 does the same thing, and 2025 does the same thing. We could have a long, slow grinding to where you kind of are lulled to sleep that it's not that bad. It's just, it's just a downturn. But you wake up a year, 18 months later, and suddenly the thing is down 50%. The market's maybe 60%, but it just took more time. It's still a market crash, Joe. It's just happening slowly in a longer period of time. I think stagflation is a very real possibility, Joe.
Yeah, and this is going to be a killer for those in retirement, for those, especially those getting close to retirement. For too many people out there, they've only got two avenues. Whatever I have on my house, and again, that's right. Who knows what that's gonna look like. And then my 401k, that's it. I didn't do any extra saving. I didn't put gold and silver away. It could be extremely painful, especially those looking to retire in the next 3 to 5 years. They could be in a situation where, as they were getting ready to retire, like Jason said, hey, I lost half my money.
And Joe, it could be one of those things. I'll just work another year. It'll get better, just like 2020. And then it doesn't get better, Joe, right?
Yeah. 800-951-0592, $20 gold pieces, $2,095. Final segment coming up. $800-951-0592. Joe and Jason, Patriot Radio News Hour, final segment here. The Dow's down 200. The S&P's down 35. The Nasdaq's down 136. Excuse me. I got to learn how to talk and breathe, Jason. I got to get retrained.
Hey, there's a lot to talk about, Joe. Sometimes it just gets in front of you, right?
Man.
We've all done it, Joe. I mean, you've done this a lot less years than you have, but I got like multiple mutes here to have to get a cough out now and then mute it, so it gets complicated with the video.
Yeah. So anyway, gold's up a dozen here, 1838. Silver's up 18 cents, $20 gold pieces at $2,095 at 800-951-0592 in our next, the half empty cup of Joe, which is coming up next. We're going to have Steve Stars with us. We are going to delve into the Damar Hamlin incident from yesterday. Of course, that's for those of you that don't know, or maybe you're not football people, he dropped on the field in cardiac arrest on seemingly a run-of-the-mill type of tackle. And a lot of people, Jason, speculating, as we've seen a lot of soccer players, but now we're starting to see some other athletes just kind of falling over. Now, Hamlin's still alive, so I guess that's a good thing. But another player, a Jaguar player, passed away last night as well.
Yeah, he was this guy, and I can't even read his name. It's a foreign name, but Nowariri, I don't know, 38. He died. Let's just say, I'm trying to read this thing he said. And Steve Stars, I'm going to give credit to Steve Stars. He brought this to my attention this morning. But basically, he's one of those guys that's like, man, people that aren't getting vaccinated are going to hurt everybody. They're going to kill everybody. We need to have a law that just forces this upon them or put them in jail. That was how hard this guy's stance was, and he just died. of heart related problems.
Heart attack. Yeah.
Yep. So, boy, it's going to be a good one. Steve Stars. I bet Steve Stars is ready to go, Joe.
Yeah. So, and again, I don't know. We don't know. It's just very, very interesting. What happened and what's been happening, and we're going to talk more about it on that next show. The half empty cup. I don't know if our stream is fixed. Normally, you can just jump over there to 1360 KHNC. Just know this as well. We podcast all the shows at 1360 as well. There is a podcast section on our website there. You can catch all of the shows that we produce there at 1360, 24 hours a day, 7 days a week, Jason.
That's correct, and we're working on some of the extra complexities when it comes to having our guys, the guests that come on the show, and having clips and things of that nature, so we can have all of that when we maybe can podcast the Half Empty Cup of Joe here in the near future. So
it looks like it's back up too, by the way. So
excellent. Well, then everyone's gonna have a good show. I think Steve started bringing some fire, Joe, to tomorrow or next hour show.
Yeah, absolutely. 800-951-0592.
Get that gold.
How much does your portfolio weigh? That may be the real question, especially in the next, say, 5 to 10 years. How much does that thing weigh? By the way, gold spiking again here now, up 14, 1840. Wall Street losses picking up a little bit. Tomorrow, the big Fed minutes. Yeah. These guys, they can't find their backside with both hands, and we're going to wait with bated breath on what they have to say. I don't think so. We'll be back.